Ladies and gentlemen, I need to be honest with you here in this video. I have nothing to sell you. I have no false dreams to sell you. I have nothing to benefit from this. In fact, a lot of people are not going to like this, but I do feel like I have a responsibility to warn people about good and bad things. Potentially open people's eyes to risks and potential, upside surprises, when and wherever they are. And that's what I pride myself to do here on this channel is I'm not afraid to be wrong. I'm not afraid to share my opinion for better or for worse. And most of the time we are correct. And I can sit here and tell you, I think there's a 90% chance that we get a quote unquote Fed rug pull tomorrow. Now, this is not a rug pull like you think. Powell's not going to come out and raise rates or do anything super dramatic tomorrow. But based on the market's expectations, you can probably expect, again, a 90% chance of a large sell-off in your interest rate sensitive companies, in your IWM, and perhaps your eco weight S&P 500. Now, potentially this could mean a rotation into Mag 7. I would expect that it does, but there's a possibility that does not happen as well, because we still have other big tech earnings on Thursday with Apple, Amazon, and others, and then large economic data with the unemployment rate and the non-farm payrolls on Friday. But again, I can confidently sit here and tell you there's probably a 90% chance of a quote-unquote rug pull tomorrow. And here in this video, I will go over exactly why that is. First and foremost, I will tell you right now, Jerome Powell, he loves to fuck with your portfolio. I'm telling you, he loves to throw you curveballs. He does. But there is one thing I know for a fact he loves more than that, and that is his credibility. And I see a credibility issue for tomorrow and confirming a September cut. If you watch CNBC today, or really over the past couple of weeks, all the conversation is around is the Fed confirming a September cut tomorrow. And the markets have priced that in. The Russell, the IWM, is up 13% since June. The S&P is down 4%. Your Mag 7 stocks are down anywhere from 10 to 25% in that period of time. Nvidia is down well over 20% from all-time highs. Why is this? Well, as I said in the comment section of the last video, there's a good reason for this. Why would you short Mag 7, go long Russell, go long equal weight S&P? There was a couple people that asked this. Two reasons for this specifically. Number one, mega cap tech is the best place to be if we do go into recession, with rates being elevated and the Fed staying higher for longer. There's an elevated risk of a recession. Would you rather be in a consumer cyclical company during a recession? Would you rather be in a Polaris, right, that sells off-road vehicles during a recession? Or would you rather be in Microsoft, that does vast majority of their business with other enterprise companies? You'd obviously rather be in Microsoft. Any logical investor would say that. Okay, so that's number one, and that's pretty easy. We've had elevated risks of a recession since 2022. It's no surprise why PayPal hasn't done jack crap, and your Mag 7 has carried the markets higher. Okay, that's pretty well established, and I think we understand that. Number two is when the Fed has been higher for longer, it's actually benefited your Mag 7 because they're not affected by interest rates. Their clients, considering most of them are enterprise clients anyways, they're not determining whether or not to get Microsoft Cloud services based on what the Fed is doing with their interest rates. And their cash piles make them a lot more cash, so it's easier to grow EPS. It's basically money in the bank for those companies. Now, that's why those companies have been selling off, though, is because the markets are convinced we're going to get a September cut, which I think is going to happen. Let's be honest. I think there's a 90+% chance of a September cut. You would have to see really good economic data at the same time you're getting hotter than expected inflation to not get a cut in September. I think it's highly unlikely that we don't actually get a cut in September. So that's why the markets have sold off big tech, and they've bought the Russell. They've bought the equal weight S&P. This makes sense. But the expectation is Powell confirms this coming tomorrow. and he's not going to. At least in my opinion, there's only a 10% chance that he outright confirms a September cut tomorrow. And it would sound something like this if he does. Powell would get up there on his podium and he would say, we have gained greater confidence. Inflation is falling to 2%. We remain data dependent, but we feel like it's appropriate to start the process of reducing rates as early as the next meeting. That would be the Fed confirming September. I don't think we're going to get that. I think we're going to get everything else besides we're going to start cutting rates in September. Data dependent, we've made progress on inflation, but he's not going to nail down September tomorrow. The markets are expecting that, and that's why the Russell has been rallying, okay? So if we don't get that, what happens? The Russell sells off. Interest rate sensitive sells off. Equal weight S&P likely sells off as well. Mag 7 may actually catch a bid. Now this puts Tesla in a very weird position because does it rally? Does it not? Does it get grouped in the Mag 7 category or does it get grouped in the interest rate sensitive category? And we'll talk about that in just a moment. Now, specifically why I think Jerome Powell is not going to confirm September as the first meeting to cut rates is, again, if we get theoretically hotter than expected inflation over the next two CPI reports. There's two CPI reports before September 18th Fed meeting. And we get really good economic data, theoretically, although I think these things are not likely, it could happen. And Powell would basically be backing himself into a corner if he confirms a September cut coming tomorrow. We have the next CPI report around August 11th or 12th. And then you have the next one around September 11th or 12th. The next Fed meeting is September 18th after tomorrow. So what sense does it make? Let's think about this logically here. What sense does it make for Powell to confirm a September cut tomorrow? None. It makes zero sense because then you risk Fed credibility. If, unfortunate events, economy is strong, inflation comes in high over the next 1.5 months or so. But after August 11th and 12th CPI report, couple days later, you have the Jackson Hole Economic Symposium. So confirming a September cut at Jackson Hole makes a lot more sense because there's a lot less risk you're going to be wrong. And there's a lot less of a risk of your credibility being hurt if you have one more CPI report under your belt instead of two. So I don't think you're going to get Powell that confirms a September cut tomorrow. I think there's a 90% chance that does not happen. But Jackson Hole is likely the event in which you'll actually get that confirmation, as long as the CPI report, August 11th or August 12th, comes in line with expectations or softer than expected. Almost think about this in terms of earnings or an event from a company. For an example, NVIDIA, every time they hold their conference, it's like the easiest trade ever. If you guys want to come trade with us, trade this specific situation, and down below in the comment section, check out the link for the trading community. We hit, oh my gosh, so many different trades today. Got a bunch of free earnings trades, and we'll see what happens. But with NVIDIA, for an example, every time they have a conference, the stock rallies into it, sells off during it. Apple, for that matter, as well. Stock always rallies into these events, 9 times out of 10, sells off during them because expectations get risen into that event. And then, it's just what happens. That's how algorithms work these days. And much the same way for earnings. If a stock rallies into earnings, it has a much, much greater likelihood of selling off, even if earnings are great, at least to some degree. Now, if a stock rallies big time into earnings and earnings are bad and the company in question misses, then perhaps you can fall 15, 20+%. That's where you get big downside moves. The way I'm looking at tomorrow is the markets have created so much anticipation, especially in the Russell being up 13% in about a month, that even if Powell were to confirm September, it still wouldn't be that big because you're already expecting that. It's already priced in with 100% probability. But if Powell does not confirm September, as I think he will not, then you create a potential large downside reaction. Even if the door is still open for September, you just crush expectations and and create a more data dependent approach, right? And I think that's likely what we're running into coming tomorrow. Now, could I be wrong in this? Of course. But I've watched Powell for a very long time. And he doesn't want to risk his credibility when they can just wait. And that's really the bottom line to it. Now, if the Russell had not ran up 13% heading into tomorrow, I would be very bullish on the Russell because I do think we're going to get a more dovish Powell than not. But the expectation is we're going to get an ultra dove coming tomorrow and confirm September. That's not going to happen. Again, that's just my opinion. I am not a financial advisor. I am not a financial planner. The Russell could rally huge tomorrow. That's a possibility. But if I'm correct following Powell, I could foresee the Russell selling off 5 to 6% by the end of this week if Powell does not confirm September as the definitive date for the cut. If he remains data dependent and wants to preserve his credibility. And honestly, I would be very concerned for Powell's credibility if he does confirm September is the guaranteed meeting for a cut, because we have 2 more CPI reports before September. Like, I would question his credibility at that point because that's taking a big risk. Now, how can all of this affect Tesla? Well, Tesla is very interesting because it goes through different waves. Sometimes it trades more like an interest rate sensitive stock. Okay, great. We know that. Sometimes it trades more like a big tech stock. Sometimes Tesla is green alongside other Mag 7 stocks when the rest of the market sells off. So I think from that standpoint, it's really hard to tell what is going to happen with Tesla. I think you could be in for a big down move or potentially a big up move. Now, considering Tesla stock sold off over 4% today, I would say it would probably get grouped into the Mag 7 category. Lately, Tesla has been grouped in that Mag 7 category a lot more than small caps. You can even see via the price action. Tesla went up with the small caps, and now it's been falling with your Mag 6 or Mag 7. Whereas the Russell really hasn't fallen. It's still just trading kind of at the highs of the rally that we've seen, right? So I think recently Tesla has traded more like a Mag 6 or Mag 7 company. So from that perspective, if Powell does what I think he will do and not confirm a September cut, then it's very well possible you could actually see money go into Tesla and Tesla could actually rally. Now, if Tesla or if the Fed does confirm September, which I would be just outright shocked if that happens, then I think Tesla would also do well because it's grouped in that interest rate sensitive category. So to some degree, I could see either way tomorrow being a positive for Tesla. And I know that sounds crazy. Now, it's also possible that everything just sells off. It's also possible that, you know, Mag 6, Super 6, Mag 7, whatever you want to call it, sells off. Small caps sell off. The S&P, the Dow sells off. Everything sells off. That's a possibility as well. Although I think you're already better priced in the Mag 7 for a kick the can down the line kind of Powell because you've sold off. You're not priced for that in small caps, and that's why I'm a little concerned about that area. Tesla, again, has went from $271 per share down to $222 per share. I think Tesla may be better priced as well for a kick the can down the road kind of Powell. And again, I don't think we're going to have to wait long for confirmation from Powell. The Jackson Hole Economics Symposium takes place between August 22nd and August 24th. So, I mean, you don't have to wait too long, less than a month, about 3 weeks or so, give or take. And I think this, with almost 100% certainty, is the event that Powell will actually confirm a September cut. And I know I could be wrong in this. I know I'm going out on a limb, and, you know, I know this could backfire. 100%. But you needed to hear this from someone that has nothing to sell you, nothing to promise you, or you know, I'm not trying to sell you a false reality here. Whereas a lot of people do. And again, I will change my opinion when new things happen, and some people get so dead set in their biases that they can't do that. And I know with a Russell that's rallied as much as it has, people want to be bullish, and I'm bullish on the Russell. I think there's a lot of reasons to be bullish on the Russell, but for the next 3 weeks, probably not the best time to be in short-term options in the Russell, to have short-term bullish expectations in the Russell, especially heading into tomorrow. Now, I will also tell you the S&P 500 is priced for about a 1.7% move by the end of this week. That includes big tech earnings, that includes the Fed, that includes your unemployment report and non-farm payroll report on Friday. So either way, we are pricing in a fair amount of volatility throughout the rest of this week. Now, the Russell is pricing in a $6.56 move, roughly, call it $6.50, up or down by the end of this week, by this Friday. So the Russell is pricing in almost a 3% move, a technically 2.95% move, if we just want to be simple, by the end of this week. And again, I think the Russell could move 5 or 6% to the downside by this Friday, if Powell does not confirm September is the definitive date for the first cut. So I also think there's a trading opportunity here. Yes, I did make a downside trade on the Russell, but I think also waiting until Powell explicitly confirms whether or not I'm correct is probably the best way to trade this. Now, I have my own specific strategies, and I talk about those in the trading community, and everyone in that group takes their own risk in trading whatever they want to. But I do think if you are interested in trading a potential Russell upside or downside move, for that matter, just wait until Powell actually confirms it or not. And that's not financial advice. That's just the best thing to probably do in this market environment. Let me know what you think about this information down below in the comment section. Again, just for a little bit of hard numbers on this, a 5% move by Friday would put the Russell around 211. A 6% down move would put the Russell at about 208, 209 or so. That would be a huge move in just the next 3 days. But I do think reverting back to the 50-day moving average around 207, or perhaps the 100-day moving average around 204 by maybe next week would not be impossible if Powell does not confirm a September cut. So when you're looking at a move this large or potential move that could be this large in such a short amount of time, I do feel obligated to give you a little bit of a heads up. If you got some profits in the Russell, not financial advice, but not a bad time to take some profits. Let some, get your initial investment back. Let the free contracts kind of just ride out and do their thing. If you're still bullish on upside, do something, in my personal opinion. Not financial advice. Do what you guys want to do. That's what I would be doing, is securing some profits and, keeping an open mind to everything that was said here in this video. So let me know what you think about this down below in the comment section. I can't wait to read the comments and respond to you guys down there. I know some of you guys are going to absolutely hate this video, and I think it's going to age well, but it's a possibility it ages like spoiled milk outside on a 90-degree day. So let me know what you think about this down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us, check out that link down below in the description of this video. Most importantly, have a great rest of your day, and I will see you in the next one.